Since 2007 that you've been in the industry, Penny, till recent times up until now, what are some of the lending landscapes that you've seen that have changed over recent times?
With the ever increasing regulatory requirements amongst banks, it definitely had created more and more opportunities of non-bank lenders, such as Trobe Financial. The key differences between a non-bank lender to the major lenders, apart from the regulatory requirements, is the funding source.
Yeah.
So unlike banks who predominantly or primarily rely on customer deposits that are highly regulated to ensure liquidity and stability, Trobe Financial relies on a variety of funding sources such as institutional investors, wholesale capital markets, and more importantly, we do have our own private investment product.
Yeah.
With our private term investments, it does give us a net inflow of 100 million Australian dollars. That enables us tremendous flexibility when it comes to providing solutions to our borrowers. And this can be seen directly through the diversity of lending products available. Like I mentioned at the beginning of the interview, we do everything from residential to construction to your commercial to development and even a no-doc residual stock loan. So without our private investors, we will not be able to cater this market.
Mm. So back in the 80s and 90s, we were seeing a lot of the big fours dominating, and they still are dominating the industry. Obviously, your second and third tier lenders have come into play since that, Trobe Financial being one of, and also a major player. And as brokers, we have access to over 45 different lenders on our panels. So it's great to see that you guys at La Trobe offer great niches and can assist our clients as well in those borrowing capacities and spaces that they're after, as well as being one of the very few lenders with the SMSF lending side of it as well. So in the previous podcast that I did with Ibby from Ray White Real Estate, I asked him in terms of clients purchasing investment properties, if he's seen any changes or declines due to the land tax. His response was definitely there has been a less trend in terms of purchasing in Victoria. As a lender, are you seeing the same with your clients?
We are, unfortunately. We're also seeing the same decline in terms of transactions, especially in Victoria. And on top of I think that's because it's a combination of different factors. Yes, land tax and surcharges are definitely the main driving factors, but also let's not forget about other factors that's impacting the overall transactions in the market. And that includes, after 13 consecutive rate rises, everybody's pocket is tightening up. Exactly. We're also assessing, from a lender's perspective, the majors are assessing on a 3% assessment buffer.
Yeah.
There's also the rising pressure of high living costs. I think all of these combined together, we are seeing a slowdown in the residential market across the board, especially in Victoria.
Yeah, it is. It's true. It's hopefully soon it'll change and people will start purchasing investment properties to full capacity as what it used to be. So in terms of alternate lending, so gone are the days where alternate lending was not an option. So with La Trobe, what are the niches that can assist our clients with their borrowing requirements?
So we mentioned very early in the interview today that with the tightening of major bank lending criteria, it did create a lot more opportunities for La Trobe and other lenders alike. And that includes our niches in there's no DTI restrictions, and we don't double dip into investment property expenses. So The outgoings for investment properties are accounted for by shading 20% of the gross rental income. That frees up a few $100s per month in their servicing capacity. We also assess with a much lower assessment buffer at 2% in comparison to the major at 3%. There's no shading on casual income or overtime, commission, and bonus payments. So all of these are 100% accepted. We also don't have a minimal notional rent. So if you've got a client who's living rent-free with family, we're more than happy to accept a step deck coming from the landlord confirming they are residing there rent-free. Again, that will free up another few $100s of servicing capacity per month. So all of this adds up to us being a non-bank lender, being able to lend a lot more than what the client could traditionally get from a mainstream bank lender.
Yeah.